Okay, so this was the question. We were asked to prepare the trading account and the profit and loss account. In fact, I saw someone adding the two. In that case, you lose some marks because the requirement says do A, trading account, B, profit and loss account. So you also have to, as it were, separate them. If you combine them, -1. So sorry to those who combined the trading and profit. Okay, so bring the name of the business, Lazio Enterprise. We are preparing A, the trading account for the year ended 31st December 2002. Okay, so let me put in the currency, which is Naira. So we begin with the first item, sales. Like you all know, we follow by lesson return inwards. So let's check the question. There is returns, and you see some of the questions are a bit so you see the returns, you have 300 at the debits and 200 at the credits. So which of them, professors, is your return inwards and which is the return outwards? Quickly, if somebody can do that for us. Yes, which is the return inwards and which is the return outwards? Prof. Sandra.
Yes, I think the debit side is the return inwards and the credit side is the return outwards.
Okay, that's true. Okay, thank you very much. So we put the sales 9,000 as you see here. Then we less return inwards. Which is the one at the debit side, like she indicated. And that'll give us our net sales of 8,700, which is pushed at the last column. Very simple for the net sales. Then you now go on to your cost of sales, which begins with the opening stock. So our opening stock is 5,000. We add our purchases, but we ensure that the purchases is adjusted with any return outwards and carriage inwards. Okay, any return outwards and carriage inwards. So if you check the question, these are purchases, and we have carriage inwards here, as well as the return outwards, which is the 200 at the credit side on the returns line. Okay, returns, and the credit side is the return outwards. So we put our purchases here, which is 2,000. So we add carriage inwards, we less return outwards. The carriage inwards figure vividly is 150 and return outwards is 200. So when you do that adjustment to your purchases, you arrive at the net purchases. Ouch. The net purchases. So technically, The net purchases is now what comes under the opening stock, right? So that is added on to get the next item. So let's see our net purchases. 2,000, we add 150, that will be 2,150. We less 200. So that will be 1,950. Right? Great. So this net purchases, you add it to your opening stock to give you your cost of goods available for sale. Cost of goods available for sale, which will be 6,950. Great. Then you are supposed to less closing stock, right? But there's no closing stock there. So less closing stock, which is 0. The closing stock is 0, bringing you to the cost of goods sold. Okay, bring you to your cost of goods sold, 6,950. Okay, now because you don't have cost of closing stock, you can do it this way. So you would skip this line because there's no closing stock. Like the way if there's no return autos or return emos, we don't show it there. If there's no closing stock, that will mean that whatever you get here will be your cost of goods sold. So indirectly, your cost of goods available will be equal to your cost of goods sold. But then you keep the line item there, just like that. And since you don't have closing stock, you continue to add your wages. Okay, you add your wages, which is 120. So I demonstrated earlier so that you would appreciate that if you had your closing stock, that's what you would have done. But if there is no closing stock, you continue with the next thing you have to do, which is to add your wages. And that will give you your cost of sales now, which is shifted to the third column under your net sales so that you can get your net gross profit or gross loss. So 6,950 plus 120. Please, if you have done the calculation, let me see. How much would you get? $6,950 plus 120. Prof. Amanda. Okay, maybe her calculator is not working. Okay, I think it will be 7,070. Wait, 7,070. So we now compare that to our net sales. And since the sales is more than the cost of sales, we are going to get a gross profit. A gross profit. So let's see how much gross profit we'll get. So we'll get 1,630 gross profit. And that is your trading account. That is your trading account. In fact, I was just testing your pulse. Initially, I was expecting that maybe you raise the concerns about, oh, said there is no closing stock. But, well, you took the task up and you did it as you are supposed to do. And I think that is great. Because under exams conditions, you work with whatever is there, unless the examiner comes in to say there's an error. So let's correct the error, right? Great. So after getting your gross profit, we go to the B part, and the B part is the profits and loss account. Please, if for some reasons you are not following, you are not getting what you are doing, I beg you, draw my attention so that I can take time to, take you through. I'm sure it might due to the fact that maybe you missed the other class, but I think I've shared the videos, and if you have fully watched them, you should be very okay. So for the profit and loss account, we write the title, profit and loss account for the year ended 31st December 2002. Again, we put in our currency Naira. The profit and loss account can do with only two amount columns, right? And per the discussions we had, for your profit and loss account, you begin with the gross profit, or if it's a loss in the trading account, that gross profit or loss you had in the trading account is the first item in your profit and loss account. So in this case, it was a gross profit. So we bring down the gross profit, 1,630. Great. Then this time, let me ask my purposes. After bringing your gross profit, what do you do? What do you have to do? Prof. Aseye. Oh, Prof. Aseye, are you there? Hello. Okay, so after bringing in your gross profit, please, what do you do next? Based on what we discussed, what do you do next? Okay, we add other income. So can you assist me identify the other income in the trial balance? If you see one or if you have seen one, you can just unmute and mention it to the class. Yes, Prof. Ashley. Or should I say, sorry, I should say I say, Prof. Ashley, can you mention one of the other income?
Please, the question again.
Yeah, we are looking for the other income. So if you can identify one from the trial balance. Did you get the question now?
Yes, please. Please, wages.
Wages. I say, are you sure wages is
No, it's wrong. Please, no. Please, so rent. I'm sorry, rather rent. 600 Ghana cedis. Naira.
Yeah, just so you get it clear, we are looking for other income, not expenses. We are looking for other income and not expense.
Okay.
So any income you see in the question, any income from this trial balance, do you see any income? I think last time we discussed the income, so you should have a fair idea of it. Okay, anyone to assist us in that regard? I'm seeing something in the chat. Okay.
Please, I said rent. Is it wrong?
Okay, so Prof. Aseye is standing by rent, and I'm sorry, Prof. Aseye, the rent is an expense. The rent is an expense, right? Okay, let me do this. So last time we saw that the other income refers to all the gains that the business is making from other operations. Examples were discount received, commission received, investment income, right? Rent received. Now, the clue I gave you was that you will find them at the credit side because they have credit balances. So, Prof. Aseye, in your case, the rent here, if it were to be at the credit side, then it would have been an income. But this time it's at the debit side. And at the debit side, it is expenses and assets. At the credit side, it is capital, liabilities, and income. So if you are looking for income, you watch out for the credit side. But even at that, you use the examples that we listed. Commission received, rent received, income from investment, and discount received. So in this question, when we go through the credit side, we have sales here, which is not part of the other income. It has been used in the trading account. You have capital. No. Loan from bank is a liability. It's not an income. Creditors is also a liability. Return outwards, we have used it already. Then you see the last figure, which is 280. You check the item and it is discount. So that is discount received. Okay. So that will be part of your other income. And I think Alexia got it on the spot by charting in the chart session. So discount received, that is other income. And in this question, I think that's the only other income. Please, do you understand, my professors? Any question? If you are confused, please, I want to take my time to take you through this so we don't have any confusions after. Okay, I'm seeing a chart. Okay. So, Prof. Aseye, are you okay now? Do I have to explain further for you?
No, please.
Okay. So if you are looking for your other income, you look at the credit side, right? Credit side for things like rent received, commission received, investment income or interest on investment, and then discount received. In fact, the common one is discount received. So always watch out for that. Okay. So we add it to the gross profit to arrive at the total income. Let's get our total income. That will be the gross profit plus the discount received, giving us 1,910. Then what is left is the expenses. So we go on to less the operating expenses. So the expenses too, your focus should be at the debit side. Okay, at the debit side of your trial balance. But make sure you don't pick any asset or something you have used in the trading account. And I think last time we saw a list of expenses: repairs and maintenance, insurance, electricity, rent, bad debt, discount allowed, etc. So dear professors, let's see the expenses we have in this question. I think each and every one of you should be able to tell me one expense. So starting from Prof. Ashley. Prof. Ashley, which expense can you share with us or can you identify for us?
Is rent.
Okay, so Prof Ashley says rent, and that's correct. Frank. Prof Frank, if you can hear me, unmute and share your...
An operating expense. Discount allowed.
Okay, discount allowed. So let me put in the figures. The rent is 600 and the discount allowed is the 150, right? The discount at the debit side, the discount allowed 150. Great. Let me go to Prof Sandra. After that, Prof Asay should be getting ready. Prof Sandra, what's your expense? Prof Sandra, can you take it again?
Please.
I think somebody was making a point, right? Was it Asay?
Please wages.
Okay, Prof Asay, wages is an expense, but it is used in the trading account. So as you saw in the trading account here, right? Because it's a direct trading expense. So it's used in the trading account. So it will not appear in the profit and loss account. It will appear in the profit and loss account when you see salaries attached to it. So when you see wages and salaries, you take it to the profit and loss account. But if you see wages alone, yes, it's an expense, but it goes to the trading account. It doesn't come to the profit and loss account. Please, is that clear to all professors? Okay, so Professor, I think you pick another one. Okay, so
Please carriage outward.
carriage outwards. Thank you. That's great. Carriage outwards. Carriage outwards. So that's 180. Great. Prof. Sandra, I don't know if you are there. I would want to hear from you. Okay. Prof. Alex.
Interest loan.
Okay. Interest on loan from Prof. Sandra. Interest on loan. Prof. Alexia, can you also identify your expense? I think you may have to chat or send a message in the chat. We can hear you. We can't hear you at all. Okay, so while she's doing that, this is what I tell students. Take your time, pick them item by item in the trial balance, okay? And then win out the assets and the rest will be your expenses. So Prof. Alessia indicates telephone expense. There are some of them are very easy because they have expense attached to it, like the telephone expense. So this one, you don't need any serious kind of analysis. But let's do it this way. So we go through one by one. The first is stock, which is the opening stock. It's not an expense in the profit and loss account. It's an item we use in the trading account. So it won't come here again. Purchases has been used in the trading account. So the first one will be the rent, and we have that in our solution. Wages, as I indicated, wages alone like this goes to the trading account. So take note of that. Telephone expense, yes, we have it. Carriage inwards has been used in the trading account. Interest on loan, we have it on our profit and loss account. Next, premises. Premises is an asset. Okay, it's a fixed asset, so it will not come to the profit and loss account. We don't bring fixed asset in the profit and loss account. So premises will not come here. Shop fittings is also another fixed asset, so will not come in here. The next one is debtors. Debtors are current assets, and assets are not supposed to be here. Carriage outwards, we have it in our profit and loss account. Good. Next is bank. The money we have in our bank account is an asset, a current asset for that matter. Cash is also another current asset. Drawings affect capital, right? So it will not be in the profit and loss account. It will be adjusted to capital in the balance sheet. Then we have return inwards, which we have used, and then discount allowed. We have that on the face of our. So that is how you go through one by one to pick your expenses. Ignore the assets and then the items you have used in the trading account. Only focus on the recurrent expenses. So let's get the total expenses. So total expenses will be 600 plus 150 plus 180 plus 100, 100 plus 260. So that'll give us 1,290. We compare with the total income, and the difference will be a net profit or loss. In this case, it's a net profit because the income is greater than the expenses. So we get a net profit of 620, and that also ends your profit and loss account. Okay. Professors, any question?
Please, you said premises is an
Premises.
is that an expense or
It's
an
a
asset?
fixed asset. Premises. Okay. An office premise. So it's more or less like a building. Okay, or maybe a container which is used as an office building or premise. So premise is a building, is a fixed asset. Okay. Any other question? Okay, no questions, professors. I think we'll end the first session here. Let's continue in the second session. Maybe I'll pick few questions there or reactions, and then we'll look at the balance sheet. Yes, Prof. Amanda.
Mr. Ahmad, please, I read that premises can also be an expense.
You read from a book that premises can be an expense?
Yes, please.
Well, as your teacher, I would say that would have been an error in that book. Okay. Well, I'll throw more light on that in the next session. So let's join the next session then.
Please, they said it can be an expense if it is a rental, if it is rented.
Yes, so that will mean that rent of office premise and will not be premises, right? The rent should be indicated to make it an expense. Rent is an expense, but premises